Hey, this is Matt from InvestiQuant. Today is Monday, December 13, 2021. This morning, we saw the markets gap down following Friday's strong close. So Friday closed up at significant highs. We didn't make an all-time high on an intraday basis, but on a closing basis, we did. So we had a significant closing high there on Friday. And you can see this morning, we gapped down. We made a quick attempt higher, but did not quite make it to gap fill before it rolled over and has pushed lower the majority of the session, then going sideways here in the early afternoon. But what we'll be looking at is what has happened historically when you see this type of weakness on the heels of a strong close. So I'm going to select all four instruments. The setup that we'll be using will be based upon entering the market here at, we'll do 3 o'clock as a long. It will exit at the end of the trading session. And I'm going to add an opening filter here that says we gapped down this morning. So I've gone opening filters, clicked on gap down. The next thing I want to do is add a little bit of information around the weakness that we've seen so far. So this morning, after the gap down, we never made it back to the prior closing price. So I'm going to add that by clicking on equals here next to gap not filled. And then I'm going to say at 3 o'clock, we are trading below the midpoint of that strong session from the prior day. To do that, intraday close versus daily levels, I'm going to go down to below prior day midpoint and hit equals, and that's going to mean that the 3 o'clock price is below the midpoint of the prior session, so that would be Friday's midpoint. All right, next I'm going to go into the price patterns, and I'm going to add some information around the strong session we had on Friday. So I'm going to go to the new highs section here from the active today and grab one of these. I'm going to go with the 20-day high close. I could go 50, 52-week, 5-year. All of those are valid, but 20 will give me a few more samples to look at, so we'll go with the 20-day high close. And then lastly, let me put it in a bull market environment. Don't really need this 10 since I got a 20-day high close in there, but we do need the 200. So I'm going to grab both of those and click View Results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when the prior session closed at a 20-day high, and then you gap down and push lower. You never fill the gap. You push lower, and at 3 o'clock, you're trading below the prior day's midpoint. This is taking place above a 200-day simple moving average. Historically, we've got 128 samples in the S&P. We've got 109 in the NASDAQ, 120 in the Dow, and 91 in the Russell. Win rates on these are similar on 3 of them. We've got S&P coming in 64% of these have closed above that 3 p.m. price. For the NASDAQ, it's 61. For the Dow, it's 64. And for the Russell, it's 55. If you look at the average moves, the average wins just a touch larger in the S&P than the average loss. That is also the case for the Dow and the Russell, not the case for the NASDAQ, which has a larger average loss. But generally speaking here, this pattern has favored the longs historically into the close. Hopefully you find this helpful. Good luck today, and we will see you next time.